Hi, I'm Rob Fox, Director of the CoBank Knowledge Exchange Division. For the first time in perhaps decades, food inflation is grabbing headlines. The Consumer Price Index for food at home hit 6.5% in December. That's the largest monthly level since 2008. Input costs for food companies are way up. The Producer Price Index for food manufacturing surged in mid-2021 and has not relented since. Normally, food manufacturers would expect inflation to pinch their margins given two factors. One, contracts with grocers usually limit how often and when pricing can be readjusted. And two, sales volumes can take a hit as consumers look for better valued alternatives. At least that's the way things usually worked out before COVID. However, the unique circumstances of the pandemic have led to a different situation. In fact, food company margins have remained strong despite the incredible run-up in input costs. The exact reasons are not entirely clear, but probably the largest factor has been the unyielding consumer demand for groceries. Most analysts thought last year would be the year when consumers went back to their pre-pandemic spending ways, namely more eating out and less eating at home. Now, while restaurant spending returned to pre-pandemic levels in 2021, grocery store spending remained 15% above pre-pandemic levels. It appears that those new consumer food spending habits are now firmly entrenched after 2 years of the pandemic. Bottom line, food manufacturers are enjoying strong profitability despite the record high input costs, and we expect both to continue through 2022. To learn more, read my report on CoBank.com.